Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We're looking at NIO once again, and yuck, this is a bad look. If you look at where we are today on the 1 day, 5 day, 15 day, 1 month, 3 month, 6 month, and 1 year return, you'll notice they're all negative, they're all red, they're all bad. Things have gone from bad to worse to very bad very recently for NIO. We are down 2.11% today. We are down 19% over 5 days. We are down 24% over 15 days. And we're down 22% over 1 month. Things are essentially uglier and uglier the further you look out in the background of what has happened to NIO over the past year. Now, if we think, just looking at the raw data, that this is as bad as things can get, I would have honestly thought that 2 days ago. And why do I think that? Well, if you look at column K here, when you see the blue lettering with white background, that means that it's 3 standard deviations below its 23-day average. It has been that far down for 5 days in a row. I don't even know how many sigmas or what the low probability event of that happening is, but NIO did it. If we look here, this thing has been below its 5-day moving average and its 23-day moving average essentially since the middle of August. And when you got that negative rolling 15-day return on the 15th, that was a good signal. Now, if you didn't want to pay attention to anything except for just this, it's been a one-factor thing. You could have been looked at the 1 month rolling return. As soon as the 1 month rolling return went negative, you can see that things completely changed in the stock. You would have been getting that signal around $10.95. Where are we? Oh, check that. We're at $8.35. Yuck. We're down 22% in one rolling month. Now, if we look at the signals, we've got the go short in the short term, intermediate term, and longer term. Those have resumed, but you can tell that we essentially got those signals all the way across the board. If you think about all three kicking in, as well as a bearish in the short term and intermediate term, again on the 22nd, slightly after we got that 1 month rolling return going negative. Now, if we look here at the trend, we can see that we've had bearishness primarily on short term, intermediate term, and on the longer term, all in unison ever since it looks like the 31st of August. Now, if we want to look over at the rolling trend, rolling sentiment in general, and what is going to be affecting trend, we do see a rising bull. Now, this has confused the model, and the reason is because things have been so bad. The reason why it looks bullish is because it gapped down, it kind of held, and then it fell even fast. It fell lower, but not as fast. So things look slightly bullish, even though they're not. Right now, if you look at this 2-day rolling average, we are very negative. We are going from 44% to 43% in 1 day. Going from 44% to 44%, a little bit lower and some change on the 5-day rolling. We're going from 49 to 46 as of today into tomorrow on the 10-day rolling bullishness. That's terrible. We look at the trading signals. These are essentially useless for right now because the bull Q3 has been tricked. The rising valley had been tricked. The coming rising bull had been tricked. The only thing we'd really believe would be this big bear. And I would say that's probably because either the last signal that we got of a buy or sell was a sell. We got some buys back here, but those were lies. Those were absolute lies because the price action that we've seen in NIO has been nothing except for disrespectful to its long-term shareholders. If we look at this on the close chart, what have we done in the past year? We've gone for a ride, but it doesn't look like it's been much fun. I mean, if you bought down here, sold up here, and then got short here, and then are still short here, I guess that's fun, but you're then probably the greatest trader that's ever existed on the planet, and why are you wasting your time on NIO? Respectfully to all of the bulls, I hope that you didn't get too hurt. I hope you had to stop. When we look at what the daily sentiment is, we can see that this thing was essentially rising off the bottom in March. It did hit that high in August, and essentially we've been on a decline ever since. Now, again, this is the type of indicator that can get very easily fooled by the type of price action we've seen in NIO, so do not believe in this. Now, volume, in other hands, is something that cannot lie. It cannot hide the truth, and it will always show you the true colors of what it has. It has no poker face. That's what I'll say about volume. It has no poker face. We can see 215 million shares traded on the 19th of September. Let me guess, that was a down day. Yep, that was a down day. That was a big down day, and that is a very bad sign. When your volume spikes are coming and when the price is dropping, that is a terrible sign. What you want to see is volume explosions on prices moving up because that means that there's a lot of confidence and the market is being overwhelmed with demand. What do you think this means? That means it's been overwhelmed with supply, which means that you are essentially at a clearance sale with no one even interested in picking through the table. That's what we see here at NIO, and I mean no disrespect again to the long-term shareholders, to the investors, to anybody who's actually part of this, because when you look at it, you want to believe in the idea of EVs, but when the price is telling you no, whew, you got to believe it. We look at volatility here. It's essentially gotten weird. It rose after what? The middle of August here. It rose. It's fallen. Now it's flatlining. I don't even know how to describe that. Again, this is a great example of how this model is going to be fooled because it's based on the idea of continuous motion. It's like the idea of watching season change or watching the equinox or like the peak and pinnacle of summer in the heat, and it slowly starts to cool each night slower and slower and slower until eventually you're in fall, winter, spring, and then it starts all over again. We can see here in NIO, we are definitely going into the fall. If not, we're in the dead of winter right now. It looks like if we look at the trade range here, there's going to be a potential explosion in the size of this range, but it looks like it's probably going to roll over and then keep going down. You can see the bottom of the range is at 807. You really don't want to see that break $8 or $7 because where we're looking at right now, NIO does not look like something you want to mess with for very long. It looks like there's an opportunity for this thing to completely collapse. I mean, it essentially did, considering the fact that, again, the 22nd of January 2021 was the worst day in NIO shareholder history, especially if you bought up at those prices. Today actually may not be a bad time. Now, I've made videos in the past saying that I think that this weekly move that we've seen in NIO may actually be a good resumption of bullishness. We may be getting through the actual bottom of the bear market in NIO. Because if you look at this, this is years of pain that we've been going through. So it's got to end at some point. Maybe we get a nice flush out back down to like that 775 level on the weekly, but we're pretty close to that now. So if you're actually thinking about a long term like look on NIO and you want to buy something, I actually wouldn't be opposed to right here because yes, it can still go down, but you are really coming into probably some proper resistance or support here. I mean, at 750, $8. So hopefully that'll actually hold. Now, when I think about where we are on the daily, this may be coming into a flush that you may want to buy. If you're thinking about what it's going to be set up as and you have your own opinion, don't take mine because this is not financial advice. I'm just some guy on the internet who built himself a model with free data that he got through Google. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We send you 25 stocks to your inbox every single Sunday. Stocks between $5 and $20 breaking out. Stocks breaking out to 1-year highs. Stocks breaking out to all-time highs. It is a great list to get your trading week started. I will talk to you soon.